What's going on, team? It's Caddy with Money Investing. I hope that you all are having an amazing day. So in this video, I will give you guys a morning update on the S&P 500 index, the ticker symbol SPY, which is the ETF that tracks the index, and then of course the S&P 500 futures. So right now we're up just about 10 to 13 basis points. This right here is going to be the futures, and you guys can see how this previous support level is now acting as a resistance, and the futures is currently struggling to break out of that level. For SPY, which is the ticker symbol that tracks the index itself, it's an ETF, you can see that we're pretty much flat on the day and we're still trying to determine direction. And by the way, if you guys enjoyed this video, please make sure to drop a like because it really helps out with the channel and recommends this video to other people who might be interested in watching. Also, subscribe and hit that notification bell so you don't miss out on any future market updates. I usually post 2 updates per day, one in the morning, one at night, essentially updating everyone on what's going on and what are some of those key support and resistance levels that I'm going to be watching very closely, and also videos on different stock analysis and technical breakdowns. So definitely hit the notification bell so you don't miss out on any future content. So we're going to jump over to the S&P 500 index, and if you guys did get a chance to watch my update from last night, this right here was the symmetrical triangle or the wedge or the channel that we were looking at, and I essentially said that I do see the pattern filling this gap and consolidating more, and kind of the candle is getting smaller and smaller and smaller over time for the next few days until we do see a breakout or a breakdown on a really big catalyst. Now the cases are increasing every single day, and we're now again to record levels, especially in states like Texas and Florida, but a second lockdown is essentially off the table because of what everyone's been saying, that we're not going to go into a second lockdown because that's again going to put a pause on the economy and essentially delay the economic recovery. So that's a different story and something that we need to look out for, and unfortunately the cases are rising again, and that's not something that we would have hoped for when we were in this reopening phase. But that being said, the market can discount any single piece of news, whether it's related to the cases, whether it's related to the Fed, some other economic indicator, or the fact that the banks have been doing incredibly well after FDIC came out and said that they were not going to put as strict restrictions on these banks and lenders as previously expected, which is why all the major indices essentially rallied yesterday. It was heavily weighted by banks. But moving forward, if you were to look at the futures market, we've been tracking this for a long time, and we understand that there's a very clear resistance at 3150, 3000 level being a really good support. So I do see the pattern just kind of going back and forth in between this channel until we see a breakout or a breakdown. Now that being said, this old support is acting as a new resistance right now, so the pattern can very well change directions today and pull back. Now if you were to look at the S&P 500 index ETF, that's ticker symbol SPY, and if we highlight the same lower highs and the same higher lows that we identified in the S&P 500 index, you can see how the momentum a little bit is on the bullish side because it is essentially needs to fill up this gap on the day. So if it can do that, then we're looking at a small gain for the S&P 500, close to about 1 to 1.3%. It's not going to be a small gain, it's going to actually be a small rally for the markets to essentially fill out this gap. But if it's not able to do that, and if it gets rejected right around here at the $307 level, which it is struggling to break out of right now, but again, we're pre-market, the volume isn't really there, and it's a really thinly traded session anyway. But when the markets do open, I do personally see a push up over to the $311, $312 before getting rejected at this level due to this lower high that the pattern has been making. Now there is a very clear resistance at 315, similar to the S&P 500, which is at 3150, and the futures, which is also at 3150, because there's a lot of pent-up supply at this level up top. So until we break out of this level with heavy volume, I don't see the pattern going past this level. I still see it for a minor rally back down and then consolidating within this channel until we fill out this gap horizontally and then make a huge move in either direction. It's going to largely depend on the news and the catalyst. But I hope you guys enjoyed this video. I wanted to quickly go over some of the technical support resistance levels. Still very similar to what we have previously talked about. Just something that I want you guys to look out for and create alerts for, just so you get notified if the pattern is making those moves. So one more thing that I do want to mention from an economic calendar standpoint, if you were to go over to my alternative watch list, and if you were to go over to these charts, this is going to be the personal savings rate, for which the personal income and the consumer spending results come out today. Again, that's going to be the economic data that is released by the Bureau of Economic Data, and we are expected to hear from them by 8:30 on personal income and consumer spending. So I've gone over this chart right here, ticker symbol PI, if you are on your TradingView platform. Essentially, this is the personal income, and we have seen a significant increase in personal income. If you guys were to put the consumer spending chart side by side, which is going to be ticker symbol PCE, you guys will notice how the consumer spending has dropped significantly, right? So it was at a really high level back earlier in March, and then we've seen such a big drop, close to about 20%. I think it was over 13% in the month of May. And the reason is that people are still getting the stimulus payments and they are getting government support, and personal income takes that into account. So it's not just your wages or salaries, it also takes into account your social security and all the government benefits that you're getting, which is why you've seen such a big spike in personal income and then such a major drop in consumer spending due to the fact that people aren't really spending money on anything, which is driving the savings rate, which is the highest on record for the United States, all the way up to 33%. You guys can pull back all the way back to 50 years since 1960, and we haven't seen such a high savings rate for the American people. Now, then that's essentially coming from two factors: an increase in personal income and a decrease in consumer spending. So both of those reports come out today, and we'll find out if the savings rate essentially went even higher or if it dropped a little bit. But that being said, I just wanted to go over quickly some of those macroeconomic indicators, some of the different pieces of news that are coming out that can affect the markets, and highlight some of those key support and resistance levels for the S&P 500 index and the ETF. As always, if you guys enjoyed this video, please make sure to drop a like. It really helps out with the channel. Subscribe and hit that notification bell so you don't miss out on any future videos related to these market updates, usually twice a day in the morning and at night, and then videos related to investing and technical breakdowns. As always, happy investing, and I will see you guys in the next video.